GDP just jumped up. Jumped may be a strong word. Just went to the positive side in the revision, up 0.1% in the fourth quarter. What do you make of this for gold?
Not much of a market factor for the gold market today. I think the gold market is focused on the keener investor risk appetite that has pervaded the marketplace late this week.
So does that mean that in general most people weren't looking at the GDP change because even though it was a slight upward move, we pretty much already knew that it was a pretty flat reading in the first place?
Right, Joe. The thing that the gold market is looking at right now is they're just competing assets. The stock market is near a 5-year high. U.S. stock market, that is. European stocks were firmer today. The Japanese and Asian stocks have rallied recently. The European Union sovereign debt crisis was back on the front burner earlier this week. That situation seems to have calmed down a bit. So you're seeing some, the safe haven demand that we saw earlier this week to a degree in the gold market has backed off. We've also seen technical selling pressure in gold late this week as the near-term technical posture for the gold market remains in favor of the bears.
And before we let you go, Jim, what about Italy? We saw that the elections really didn't give a sure-line advantage to one party or the other. Is there any worry here for gold investors?
Well, there is a little bit of worry, but I think the initial reaction was a bit of a knee-jerk reaction. We just had the head of the OECD come out today and say that he did not think the Italian elections would cause any significant changes in the overall effort to fix this European sovereign debt crisis. And also, Joe, we had some Italian government debt auctions this week. Interest rates went up a little bit, but they were fairly well subscribed. That's another indication that maybe the marketplace is moving beyond the Italian elections, and this and the European sovereign debt crisis may continue to stabilize.